Abercrombie after reporting an unexpected loss for the first quarter and giving a slower outlook. It is the latest retailer to get hit hard. Last week saw Target and Walmart sell off after weaker than expected results. Joining us now is Oppenheimer and Company's Brian Nagel to talk about some of these trends. Brian, good to speak with you. What's your main takeaway from, let's say, what Target, Walmart, Best Buy had to say? We knew there was going to be a shift away from goods purchases towards services. Obviously, there's inventory issues, and how is that filtered into your outlook?
Well, good afternoon. Thanks for having me on. Look, I think Stephanie brought up the perfect point, and that's what's happening here is as the economy is moving away from the COVID-19 pandemic, consumer spending is shifting. We started talking to our clients about this a couple of years ago. We were obviously very early with the call, but nonetheless, it's happening. And I think right now, from an investor standpoint, the market is very much on recession watch. And any signal of weakness from any retailer or brand is being taken as an indication the consumer is slowing. But I oftentimes, as I'm looking at this data, I think that at least initial interpretation is probably not correct. I think the underlying consumer here is in good shape, but you're definitely seeing shifts in consumer spending as the economy moves away from the pandemic.
We see Best Buy actually able to stay green today. It's up about 1% on the back of its results. And, they were mixed, I suppose, but it's all about what was already priced into the stock, down by nearly half. Is that encouraging at all? Does it imply something about how, these stocks have already accounted for some of these issues?
I think it does. I think there's a lot now, I think, that's discounted in these stocks. I think, look, I looked at Best Buy and the note we put out to our clients. We basically said the title, it was soft, but it was very much better than feared. And the big issue for Best Buy is they were here in Q1 of 22, they were lapping an extraordinarily strong Q1 of 21, which was fueled by, you still had these trends, so to say, the stay-at-home type trend was still in place, but probably more important than that was stimulus-fueled spending. So on top of that, Best Buy sales were weak, but they actually held up better than feared.